Today we're diving into a niche but incredibly powerful real estate investing strategy, hard money lending.
Think of this as playing the role of the bank. You, the investor, lend the money to the real estate operators, typically flippers or developers, and in return, you earn interest. What makes this strategy attractive is that these loans are almost always secured by hard assets, real estate.
Before we get into how hard money lending scores on the Fastfire Investability score, let's break it down, specifically where it fits into the capital stack. The capital stack represents who gets paid in an investment. At the bottom are equity investors. They have the most upside, but also they take the most risk. Then comes preferred equity, followed by mezzanine debt, and finally, senior debt at the top.
Hard money lenders typically operate in that senior debt position. That means they're the first in line to get paid. If the borrower defaults, hard money lenders have a claim to the underlying property, often with a conservative loan-to-value ratio that offers built-in downside protection.
Now here's a crucial detail. Not all hard money loans are created equal. You want to be in the first position on the loan, meaning no other lender gets paid before you. This is critical in a default scenario and is one of the key ways to mitigate risk.
So you might be wondering, how is hard money lending different from other types of lending, like peer-to-peer lending or private credit?
Great question. Peer-to-peer lending usually involves unsecured consumer loans. Think debt consolidation or personal loans through platforms like Lending Club or Upstart. These are high risk because there's no collateral. Private credit, on the other hand, is a broad category that can include everything from corporate loans to asset-backed financing. It tends to be more diversified and often requires fund-level access with higher minimums.
Hard money lending is more specific. It focuses on short-term real estate-backed loans to individual operators. That direct connection to a tangible asset, combined with the senior lien position, makes it unique.
Let's now look at how hard money lending scores on our Fastfire Investability score. Starting with return potential, we give it a solid B. Hard money loans typically earn 8 to 14% annually with predictable monthly cash flow. While it's not a moonshot, the income consistency is what makes it appealing.
Next is risk profile, which we also give a B. If you're in the first position with proper underwriting, risk is relatively low. However, you are still exposed to potential defaults, market downturns, or project delays.
Last is accessibility. We scored a C. These opportunities are usually private and network driven. Some platforms offer access at lower minimums, but most deals require you to be accredited and have $50,000 or more ready to deploy.
Let's bring this to life with a real-world example. Imagine you loan $100,000 to a real estate flipper for a 12-month period. The property is being purchased for $80,000 and the flipper renovates the property for another $40,000. After renovation, the after-repair value is estimated to be $200,000. Your loan is secured in the first position, so if the flipper defaults, you can get the property and take over the project.
Each month, you receive 10% annualized interest, or about $833 a month. After 12 months, the flipper either sells or refinances the property, and you get your $100,000 back. Throughout, your downside was protected by a large equity buffer. That's why hard money lending is so attractive for high-income earners who want cash flow and asset-backed security. But always vet the sponsor, the deal, and your lien position.
So to recap, we give return potential a B, risk profile a B, and accessibility a C.
To learn more about alternative investments and how they stack up, download our Guide to Alternative Investments at fastfirecapital.com/guide. And don't forget to like and subscribe. We'll continue to break down various alternative asset classes utilized by the ultra-wealthy using our Fastfire Investability score.